over a little bit. There we go. Hey, welcome everybody. This is the Taps 2 Cents live podcast. I've got Simon Handrahan here with me. We're just going to talk a little bit about market conditions and a little bit about investing styles and what we're looking at on a daily basis. I don't know, Simon, if you want to just start.
Thanks, Joe.
Talk a little bit about what you're looking at day to day.
Yeah, for sure. End of summer here. It's been really fun. Hopefully everyone's had a great summer. I think you check out the markets lately. Things have been kind of all over the place. It seems like it doesn't kind of know where it's going, I guess, and it's always kind of fun to watch along. I don't think it really changes kind of what I do in terms of what my choices are in terms of investing, whether I'm buying something new or not. But it is kind of interesting to see. Like, one thing I did look at just now was kind of the fear and greed indicator, and really it's like a meta indicator from there's all kinds of metrics that feed into it. And it's been hovering just above neutral, so like dipped into the greed territory for the market. So it kind of tracks the U.S. stock market and various different things. And what I thought was really interesting was that even though it's kind of dipped into the greed, really most of the sub indicators are actually neutral at this point. What I thought was interesting there was the only one that's actually above neutral at this point is one of their momentum indicators for price. So I just thought that was really interesting. It's like, you would think if it's pushing itself into the greed, then there'd be a bunch of things kind of pushing it that way, but it actually seems like really it's just like the stock price itself, the market prices, that momentum. And maybe that's really just a bit of a hangover from even the 2022 lows where things are coming down in price. And there was really a lot of bounce back from that. So maybe that was just, maybe we're just kind of seeing the bounce back from that. And I wonder how much that'll fade over the next little while if prices don't continue. So momentum's always an interesting one to me. Like, it's something that works while it works, and then as soon as it doesn't work, all of a sudden, look out below if there's nothing else really there supporting it. So again, it doesn't really change, I don't think, too much how I see things, but always kind of interesting to see where sentiment is, I guess.
Yeah, momentum's kind of a funny thing, especially if you're one of those people that play it both ways.
Yeah.
Like, when is it going to turn? Like, when is it time to buy calls? When is it time to buy puts? A lot of the options guys, they're all over momentum. But,
that's right.
For long-term value investors like yourself, you just kind of sit back and watch the show.
It does seem like a good market for people that are looking to pick the right businesses that way. It's not like it doesn't seem like things are like overheated in terms of, broadly speaking, valuations. I'm sure some people think that's not the case, but I don't know. What do you think, Joe? Like, how have you been seeing things lately?
I mean, I think it's kind of the phrase, sell in May and go away. You've heard that before.
Yeah.
And generally when they say sell in May and go away, you return to the market in September. Right. And then when September rolls around, everybody's kind of back from vacation, they park their yachts or whatever. And they've decided that they're going to start investing their money in the market again. And whether that be bearish or bullish, I think that for me, September is always fairly telling in how the market goes. And there's a lot of things going on that has nothing to do with investors, like the war in Russia, or oil supply and demand. Like, those guys, they don't care about people in their yachts. It's just there's only so much oil or whatever.
Yeah.
But I do find.
Do you think like the September is kind of a tail of the tape for the rest of the year type of thing in terms of where things go?
I'm not sure yet.
Yeah.
I haven't really been that aware of it for that long to know.
Yeah.
And I think it's hard to predict, obviously.
For sure,
but I definitely think that September is a good month to start paying attention again. And I don't think there's any problem with sort of taking the summer off like a lot of investors do, because you can't be full blast all year round.
Less activity if you're a macro guy
to
really dig into.
And you'll notice the volumes are lower in the summer. And because volume's lower, obviously that can affect the stock prices in different ways, right? Even, some of the bigger cap names will have lower volume, so less money can push those stocks up or down.
Right.
So maybe it's not so much price dependent in the summer.
That's interesting. So like,
Yeah.
from a momentum perspective, then if there's less volume, then you would think maybe that's a false signal almost, or
Could be, yeah.
who knows? I don't understand the technical
Mhm.
aspects of that enough, obviously. So
Yeah, like volume's definitely like a huge player. Like if you watch, like I had a guy on Charting Man Dan,
oh yeah,
and he's a day trader, but he also understands the technicals very well.
Yeah.
And he's like, when you see like these bull flags and then you see it matched with volume, you know, it's like for real.
right.
Whereas you see a bull flag, but the volume's low, then it's, you know,
Noise.
maybe it's a head fake because
Right.
it just doesn't have the umph behind it to like.
There's no real fundamental like supply and demand mismatch causing anything there.
Yeah, it's like, or you know, maybe it's just guys aren't interested in selling or whatever, or buying, depending on the direction, and
Yeah.
it can have a big jump. I know, like you've noticed it in your microcaps, right? Like
Yeah.
there's sometimes the spread on the bid and the ask
Yeah.
is like, you know, 5 cents on a 15-cent company.
Yeah.
So you know it's going to move 30% on selling one block of shares.
Yeah, those ones can be based on nothing. Those bids and asks are non-existent. It's a trade by appointment type of market. For sure.
It's really interesting in the micro caps. Like when you watch them, and you're like, you see a 10% move, and you're like, oh wow, but really, there was only one sale.
It really doesn't mean much.
It's not.
I had a few that have done that, where all of a sudden the price is up 20%. It's like, well, for $14 or something, it changed hands. It's like, well, okay, doesn't mean anything to me. That's just somebody with a market order and it shouldn't have.
Yeah, and you're also not necessarily going to be able to sell your whole block at that price.
Yeah,
which is something I learned as well. Like with some of these micro caps, like you're like, oh, what's up 20%? I'm going to liquidate. Well, there's no bids.
There's good luck. That's not a real market price per se.
Yeah, and that's why people are drawn to the Teslas, and Tesla's like the highest volume out there. Yeah. So you can get in and into it fast and get out of it fast.
Yeah,
which is really, really interesting.
Mm-hmm.
But yeah, I think September, it's to be determined whether it'll be a bellwether for the year.
Yeah.
But it's definitely, I know for sure, September is a time when volume starts to pick up and people start paying attention, and the weather's colder, so they're maybe looking at their screens a little bit more. They're going back to work.
Everyone starts buying the stocks I don't own and selling the ones that I do own.
Yeah, exactly. Like I know if I'm a hedge fund manager, I'm not working in the summer.
Right.
So these guys, they have their algos do the work for them through the summer, and when they come back, they make the decisions, I think.
You think so?
Yeah, that's what I think.
Yeah. I don't know. Yeah. Could be.
But yeah, so, it'll be interesting. I think this year will be driven heavily by the election in 2024, and election years are always weird. Like think about the last ones, right? So what, 2020?
Yeah, it can be really,
COVID.
Changing people's perception of what's going to happen.
Yeah, like I'm not saying that there's going to be a pandemic, but or that they caused it or anything like that. All I'm saying is that
it's next. Yeah, that's right.
Like election years are weird, and they're always weird.
Yeah.
So, I think the market's going to see some stuff that it's going to react to.
Do you think that like for election years, the weirdness is priced in earlier though? Like the uncertainty though that is known, like as a scheduled event. So then once the election actually occurs, the uncertainty goes away because the candidate that one is known generally.
Yeah, it does get priced in early.
Yeah.
And you'll see that if you have a front runner, like let's say it's probably easier to talk about Canada,
right?
Just for as an example, but because we're so polarized, maybe they're polarized too, but not necessarily in the business world as much, I don't think.
Okay, yeah.
So like if although Trump wants to cut more taxes, but anyways, let's say Pierre Poilievre is leading by like 80%. I would hazard a guess that Alberta oil companies are going to be going up. You know what I mean?
Yeah.
In anticipation of him winning and cutting regulations.
Right. Making it a little bit easier for them to develop new production and continue their business. Yeah.
It's like when Trudeau, said he was going to decriminalize marijuana if he won.
Right.
As he was leading into that win,
You didn't have to actually win yet for it to be priced in.
It became clear that he was going to win,
Yeah.
and the pot stocks moved.
Yeah.
So it's
That's
just
right.
kind of like those kind of things I think will be happening throughout the election in the States.
Yeah.
And if Trump is the guy, then, you know, maybe this kind of bull momentum that we're seeing now continues, because they're going to get tax cuts and they're going to get, you know, they're going to be hard on China. They're going to be pro-America.
Right.
So they're going to be doing a lot of things that are good for American companies, but are maybe not so good for other places.
You're right. Yeah.
So you might even see some money getting pulled out of other countries and put back into the States.
Yeah.
So
but
that's something I think that will have a huge impact on the next year as we move forward.
Mm-hmm.
What about you? You had a few things you want to talk about.
The only other thing I was really going to mention was I think markets are still compared to, it's interesting, like, compared to history. Like, I was just looking at the Shiller price to earnings ratio for the S&P 500, which is like a cyclically adjusted number. People kind of talk about it all the time as if it's something that really tells you something in the short term, and it definitely doesn't. Like, it doesn't tell you if the number is high. That doesn't mean that, you know, it's going to crash all of a sudden, but it does tell you like what you can potentially expect going forward in terms of returns.
Mm-hmm.
So right now it's at 31. Now that earnings can obviously change a lot as well with the recession coming. So 31 with a potential recession happening in earnings, I guess in a lot of cases the recession in earnings has already occurred. So in that case, it depends on maybe what industry you're in and things, but it just seems like if you're going to go and like index and buy the market, then I don't know if you can really expect historical market returns of, you know, the 10% that people quote.
Mm-hmm.
I don't think that means that you're going to lose your shirt investing in, you know, the S&P 500. It's still a high quality index by all measures, basically compared to other indices, but it's one of those things where would you expect gangbuster returns from here? Like, it's hard to know, right? Seems like it would be more difficult. So that's one thing I do keep an eye on. Like, it did come down last year, and then it's really kind of bounced back a little bit. It's not like an all-time high or anything like that, so it doesn't seem like it's in like this bubble territory. And people often quote like the median from the historical like longer term average, and I don't really think that's a good reference, because like the composition of the companies that are in the index has changed so much over the last 50, 60 years. A lot more asset light, growth businesses that are higher quality. So it's really tough to compare, the index from today compared to the index of 20, 30, 40 years ago.
Mm-hmm.
Yeah. I mean, locally, in Canada, I think a lot of people are often looking at like the housing market as well, which I do find very fascinating. Like, I know in this area and like in different areas across the country, it seems like people's thesis on prices really crashing when interest rates go up hasn't really come to fruition yet, and maybe it just hasn't happened yet. I think the housing market is typically a little slower to react to those kinds of things. So I think over the next year, we'll really tell the tale in terms of, is there going to be a correction more broadly, or is it going to be a regional thing? Because I think there's a lot of secular demand for housing, and it seems like there's a bit of a shortage, is what the narrative is anyway. So what wins out, right? Does affordability mean that housing prices have to come down? Or does the secular demand versus the maybe lower supply, does that win out and pricing kind of remain stubbornly high? At some point, if people can't afford to buy a house, then I guess there's no marginal sales and the prices do have to come down. That being said, maybe it's a little more complicated than that. Maybe wages are what come a little more sticky in terms of inflation, and that actually kind of bails out the housing market. It's really difficult to know.
Yeah, housing is tough, and inflation is definitely something. I know we talked about it before the show that I said I was going to mention, and I think, and I'm interested to hear your feedback on this, but this is my theory. This is
Yeah, go for it.
my brain is always, looking for big macro movements, and I can't help it. It's just the way I think.
Yeah.
But anyways, I think inflation is going to go up in Canada despite all of these jobs reports and unemployment and the turning of the economy. Our GDP is like it's going down now, right? So traditionally your GDP goes down and inflation also moves down with it because people are making less things and they're making more money and
less productive.
Yeah, economics are making less, they're spending less.
Right.
But we're in a position where our inflation can't necessarily be controlled by the Fed in traditional ways.
Right.
And that's because I have it written down here. So our last CPI reading, so there's a couple things, the main contributors to your CPI. So you've got rent was 5.5% of it. You've got electricity is 11.2. You got meat prices 7.7%, and then you have mortgage interest cost, which was 30.6%. So you look at our CPI, and 30.6% of that CPI number that is higher than the Fed wants was created by mortgage interest, and that's because they're raising rates.
Right.
And everybody's renewing at higher rates and paying more money for their mortgage, and it makes it difficult for them because the higher they raise the rates, the higher the mortgage interest cost is, the higher the CPI goes. So in 2023, we have in Canada, because we're 5-year, it's different than the States.
Yeah.
Like in the States, they've got 30-year mortgages at 2%. Nobody is selling their house.
Right.
Like, why would you sell your house at 2%?
That creates all kinds of different problems.
Yeah, just to buy a new, losing 6%.
Oh, sure it is.
You know what I mean? For 30 years.
Mm-hmm.
So it's like, yeah, it's bad. So in Canada, we had 2023, $276 billion of fixed rate mortgages renewing. 24 is going to be 331, and 25 is going to be 352 billion. So
yeah,
a
lot of stuff coming due.
24 and 25 are heavy years for renewal rates, and if you talk to lots of people, at least anecdotally for me, they're renewing in the next 2 years. And then back in 26 it's down to 230 billion. So I think in Canada we're gonna see an increase in inflation, and it's gonna be ugly because they can't really hike rates to get rid of it.
Right.
And I'm not sure what that's gonna do to households or what that's gonna do to maybe they'll have to hike anyways.
Right.
Just to hopefully crush everything else.
Right.
In which case that could cause
a
housing correction, because people have no money and the rates will be like 7%.
Do you think it's possible that you get a price decrease in the housing sector because of these factors that kind of put a lot of pressure on pricing, but at the same time, there's still a supply-demand mismatch for housing. So
it's very dynamic.
Does that mean that like new house construction still can pump out as much, like new home builders do well still, but yet pricing gets hurt a bit?
It's hard to say because I think although our renewal rates are 5 years, I think if we see inflation and the rates going higher, people will be in a similar boat. So they're not going to want to sell, right?
Right.
So if people aren't selling, they're going to have to build new homes. So it is possible.
But if they're renewing and they can't afford it, like they're going to be forced to sell.
Yeah, but not right away, right? They'll hold on to it as long as they can.
Yeah.
Like even if let's say they got a mortgage last year at 5% and the rates are up to 7 or 8.
Yeah.
They're probably not going to want to sell that house until they have to.
Right.
So, maybe when they do sell, they sell and buy something cheaper and it all goes down, but I'm not sure. I don't know what's going to happen.
Yeah, that's interesting. I kind of think it would be dependent on, I think it's regional. A lot of people like to talk about the housing market as if it's some big national market, but I kind of don't think that's the way it is. It's very local, I think. Maybe outside, like the GTA is a bit different perhaps, where like, in Toronto, in the area, there's just so many people. It's a rather large market, and people can move from one point in the market to another area within the
Yeah.
same market. But in other places in the country, I think in Canada particularly, because it's such a big, it's physically big, I think it's a very local thing.
I would agree with that. I think that they're local markets.
Yeah.
I think what could happen is you might see a little bit of migration from the really expensive places, and it's already happened
I
a
think
little bit.
you're seeing that happen a little bit.
Yeah, it could continue. I know that Calgary and Alberta, and mostly Calgary. I don't know so much about Edmonton, but their markets are booming right now.
Yeah,
because
it's affordable, and
people are leaving Ontario to go there, and because it's more affordable and the taxes are lower.
Yeah.
So I mean, that could definitely happen.
Yeah. So that type of thing could really, I think that type of thing could relieve some pressure for sure. Yeah.
Yeah, and outside of Canada, the overall, I know. Did you see Michael Burry took a big, huge, massive one? I think it was $1.3 billion short position.
Wasn't that on like derivatives though? Like, so the notional value was some big number, but the actual amount that he risked wasn't that high.
It could have been. Maybe.
I'm not sure. I did see like headlines and stuff.
All I saw was it said he took a $1.3 billion short on the S&P 500 and the overall some other American thing.
Right.
Yeah.
I think that was headline bait more than anything.
Maybe could have been. If it's derivatives, it's totally different.
I think it might have been derivatives, but I might be wrong.
Either way,
someone can correct us.
Yeah. Chime in.
Obviously we don't know what we're talking about. Well, yeah, I mean he's
shorting something. So
he's a trader though, right? Like he's making bets. So he goes long and short. So that seems like a reasonable thing for him to do potentially, whatever his thesis. I don't know if he talked about his actual thesis or that was just a filing.
He just did like a Twitter post.
Oh, okay.
It was like I'm short, and it was like this much.
Yeah. Okay. Well, yeah. I mean, without a thesis to know like what he's making the bet on, or like what his actual like time thinking is on it, it's difficult to really.
It'd be interesting to talk to somebody like that and be like, why are you short? Because I think he's lost since he posted that. If he hadn't exited, which he probably has.
Yeah.
I think he's down like 30 or 40%, and a lot of that is due to like the tech boom we're seeing. Like I have this written down here, tech froth.
Yeah.
And NVIDIA is up 231.9% year to date. And this is a company with a market cap now of $1.2 trillion.
It's kind of, crazy.
Yeah. I think that's insane. And it feels to me like one of those moments where you're like, how did I not think that was insane? The
real question you should ask is, how did I not obviously make that bet in February when it was obvious and the price wasn't sky high yet?
Yeah, to go long?
Yeah.
Because
it was fairly obvious.
Yeah.
Almost. In hindsight, it's obvious. But even in the moment, I think it was March or something. I was like, oh yeah, the AI, NVIDIA is going to like.
Yeah, they're going to crush it.
Obviously, that's what their GPUs and stuff. And so, if I had that thought, well, I didn't act on it, obviously, but like, if I had that thought, how many people had that thought? Like,
a lot.
Yeah.
A lot for $1.2 trillion worth.
Know enough to actually make any bet. But,
yeah,
anyway, it seems crazy. I thought that, like the price of sales, I don't know what the revenue is like, but it's not anywhere near $1 trillion.
It's they're beating is the thing.
It's like I heard today it was 40 something times sales or something like that. It's growing. Obviously, it's growing like triple digits maybe or something per year, but even still, I think it has to like put up astronomical growth for like 10 years in a row just to justify today's multiples, right? So to do that, you would almost have to assume that they're going to get all the market that they're going after over that period of time without like some competitor coming in and like taking some of that market share from them, which why wouldn't they? Like it's good margin, good growth business. If you're a big tech business that's even remotely capable of going after that market, you don't think that you're going to be going after it? Like, of course you are, right? So when you think about the time horizon associated with those big high multiples, and then you couple that with like they have to defend their market position for that whole time for the next 10 years. It's difficult for me to like be able to bet more than $2 on that.
I know. I think I'd have to do some like real good dives to figure out what their mode is. Like what makes NVIDIA so special.
I think it's just tech for now. They haven't advanced in how they design their GPUs, isn't it?
Well, I don't know.
I don't know.
I'm wondering what's stopping, Micron or AMD or any of these other chip makers from.
I think it's just time, to be honest. Like there's expertise, obviously, that they have to develop, but it's time and money, I think.
They're just ahead of the game.
They're ahead of the game, which gives them like a bit of a defensible position in a market that's constantly kind of like think about like the chipset. If it's always advancing and you have a position lead, you're 2 steps ahead all the time.
Yeah.
Right. Because it's an incremental changes. So like if your competitors are 2 years behind you, it's very difficult for them to all of a sudden be at the same place as you. Now, the real thing to look for, I guess, is you watch for missteps, like unforced errors with NVIDIA, I guess, right?
Yeah.
So I think that's what happened to some extent with like Intel. Back in the day, they always had like a bit of a lead, I think, in their chipset, but at some point they fell behind just because they weren't advancing the way they should have, and they really lost their market lead position.
Yeah, I wonder why, that does happen in big corporations, and sometimes you wonder if it's something to do with management teams coming in and, a little bit of political
big businesses are
jostling going on, that they lose focus of what their job is rather than
they lose that motivation or the hunger. It's hard to know. We can speculate all day.
I mean, it's certainly happening with Tesla, and this is a company I did buy once, but I sold it. But it's like you watch the EV market play out, and you honestly, I think Tesla, it's not something I would buy because I think it's overvalued. But from a company perspective, like they're crushing it, man.
Yeah.
Like their cars go further, they're cheaper, they're building them all over the world, they're selling more, and I think it's just, as you say, they're just like one step ahead of
it used to be like cool to own a Tesla, though. I don't know that it's such a cool thing anymore.
Oh, I don't think so either, but I don't think they care. Because they're selling, 3, like you see them everywhere now.
But like the strong desire to go and buy a Tesla was often like, oh, that's like the really cool thing to do. And I don't know if that's quite the same anymore.
I think they've lost some branding power.
Yeah, I think so. That's just my theory. What do I know?
Well, that's what we're here for.
It just seems like there's so many of them around. It's not this novel thing anymore. So they lost a bit of that shine.
Yeah.
And it's become the thing that kind of everyone does once they get to a certain point. So it's not like this amazing thing.
Yeah. Like everybody gets, a big paycheck and buys a Tesla.
Yeah. Right. Yeah, that's right.
Yeah.
Middle management, buy Tesla. That's like the standard approach.
That's right.
Lost the white guy.
Yeah. Work for an energy company, buy a Tesla.
Right. Yeah. Dig out of the ground, buy an electric car.
Yeah. I'm not sure. I think it's just, you see the F-150 Lightning, and I don't know, that like Ford's losing money on their EVs.
Yeah. And
Tesla's profitable. Right. So I'm like, I guess they're winning, but it's so priced in. They have to win for the next like 10, 20 years. And as you say, it's one of those things where a couple of missteps, you never know what Toyota's got cooking, because those guys are crazy with
tough game.
Electric with hydrogen fuel cells.
Outside of like Porsche and Ferrari, I don't know that people have like brand loyalty that much with cars, honestly. Maybe some super high-end BMWs or Mercedes. I'm not sure. Yeah,
I mean, I think that it depends where you live. Again, there's a lot of like Ford, GM guys or whatever, but it's it could go either way. Another thing I wanted to talk about as far as inflation goes, especially in Canada, and this affects the world, not just Canada, but I think that we're going to see an increase in oil prices.
Yeah.
And there's many reasons for that. The smallest of which is not the war in Russia. which is but so
My cool
this
dog.
is what happens when you do a live
Yeah.
video. You get a dog.
He's your secretary.
Yeah, no problems. So, anyways,
Oil prices.
yes. So the war in Russia. Thing with that, I'll wait till you.
Go. I can hear you.
Okay. No worries. So yeah. It's okay. We had 0 viewers at this moment.
Yeah.
We had one. He left when the dog showed up.
More of a cat guy.
Yeah, more of a cat guy.
So
Yeah.
Putin and oil prices.
Okay, so let's start again. So inflation is going to go up, I think, because oil prices are going to go up. And when you look at the war in Russia, there's a few things that are happening there that may be missed, just from the outside.
Mhm.
And what's happening, I guess, is what I've been reading and hearing about. Other than one of the largest oil producers in the world being at war, which is obviously a huge thing, and they're going to be burning their oil to fight a war rather than exporting it. But they're also going to cut, and for different reasons. I think they're them and the Saudis and the OPEC Plus. They're cutting production because they want to keep a high oil price.
Mhm.
It's kind of like a funny balance. It depends volume and price, right?
Mhm.
So there's 2 ways they can make money. They can make money on a high price with lower volume, or they can make money on more volume on a lower price.
Yeah.
So they have to keep that balance in check, supply and demand.
Yeah.
And but I guess what's happening in Russia is there's a lot of brain drain going on.
Okay.
I don't know if you've heard that term
That
before.
makes sense. I have. Yes.
But so they're pulling their best assets and using them for the war.
Right.
So that they take their smartest people out of the oil field,
Yeah.
send them in to strategize on how to beat Ukraine.
Okay.
So there's not going to be, there's certainly not going to be,
So their oil operations are going to start suffering. At some point.
there certainly won't be any innovation there
Right.
for the next however many years.
Yeah.
There's certainly not going to be any increased production because all of these people that would be doing the work to build those are fighting a war now.
Yeah.
You get your young people and men.
Yeah.
The same people that are soldiers are going to be fighters.
Yeah.
So there's all this personnel that's into the war that would have been a roughneck, and I think that's going to have a big impact on the global market. And they're really good at playing a strong hand. They're saying we're going to cut oil production because we don't like what America's doing with you. Yeah, we're like, well, we don't like what you're doing over there, so we're going to cut production. They're just like, can you get like the actual lower number still? You know what I mean? So it's kind of it's kind of an interesting time over there. And then not to mention there's elsewhere in the world you're seeing lower rig counts,
Right.
and you're seeing this push for green energy, which is pulling a lot of investment out of oil and gas. So
Yeah.
I think we're going to see higher oil prices, and just to
That's an interesting theory.
just to back up my earlier statements about Canadian inflation. If the oil goes up, everything goes up, and
Right. Yes.
and
we're big input cost for everyone.
yeah, for sure. Like it takes
Yeah.
fuel to move your groceries to the grocery store, and then you have to
Yeah,
drive
that's
to
right.
buy it, and it is what it is.
Yeah. Well, just food production in general takes a lot of energy for sure.
Mhm.
Yeah.
Yeah.
No, that's a good. I like that thesis. That's an interesting one to think about. So, what would you watch to see if it's playing out? See what Russia's doing, I guess, versus what they're saying.
I think honestly, probably just the oil futures are the best.
Yeah.
The best thing
They could
to
be the
watch,
clues.
because it's all going to be so hidden. Like it's going to be hard to see through the Iron Curtain, as they
Right,
say.
yeah.
So
That's right.
without a spy in Russia, I'm not sure I'll be able to figure out what's going on. But I think that just keep an eye on oil futures.
Price doesn't lie, I guess.
Yeah,
Yeah.
it is what it is.
Yeah.
So like with the commodity, it costs what it costs, and you can see it in the futures curves.
Yeah.
And those guys, they need the oil to produce their thing.
Yeah.
Right. So they don't mess around. They're like, I need to make gasoline out of this. so I'm going to buy it in 5 years in advance at this price.
Yep.
So they don't really. There are some traders, and the financial market for oil is, I think it's like 20 times bigger than the physical
like
market.
The derivative markets for trading.
Yeah, the derivative.
Yeah.
It's like 20, or I used to know the number, but
compared to like the physical market.
Yeah, like the difference in prices that are exchanged back and forth compared to the actual barrels is like, yeah, I think maybe be like 80 times bigger.
Okay.
So it's, you can see the price contract.
It kind of amplifies the movements that way.
Yeah, like you can see the price contract in a way where the financial markets are telling you something's going on, but then you still have heavy demand in the physical market. So it's kind of hard to know, but you have to like kind of ignore the volatility and look for the mega trends in commodities. But yeah, I don't know if you had anything else you want to add.
No, I think that's a really good spot to leave it, probably. Yeah.
Yeah. Okay. Cool.
That's fun.
So yeah, that's what we're looking at.
Yeah.
You guys have any comments? Let us know, and we'll take it up next time. Thanks for tuning in.
Yeah. Thanks, Joe.
Yeah. Okay. We'll end that stream.